Welcome back, everybody. Today is all about grid. I sat down with Harry Sudock, CEO of Griid, and we're going to talk about his company and going public. All right, guys, welcome back. Thank you very much for tuning in. As I said in the introduction, I am here with Mr. Harry Sudock. Hello, Harry. How are you?
Hey, Jesse.
We are at block height 831151. 30-day exahash is at 542.7 exahashes per second, and the hash price is back down to 8262. Notes keep saying no when people get ahead of themselves. Harry, before we get into it, you tweeted something very interesting. You said these advancements, these advancements often require a social component to achieve network effects. The advancement needs to be sufficiently compelling to overcome switching costs and attract new users, e.g., email bigger than post offices, cars bigger than horse and buggy, sound money bigger than inflation. Question: what is Bitcoin mining bigger to? What are we advancing from there, do you think?
I think that Bitcoin mining is flexible load is greater than static load.
All right. Could it be, I was thinking initially, batteries. The other day I had a discussion with an energy consultant from Germany who told me that they had installed a 50 megawatt hour lithium battery in Germany to basically attach flexibility to a coal power plant, which I found pretty insane cost-wise. So if that's just flexibility, why not do that with Bitcoin mining?
Well, maybe the answer is that, capital efficiency is better than capital inefficiency. So, when you look at just a simple kind of IRR calculation for a Bitcoin mine, it's wildly more cost effective to build that revenue stream than it is to build, a battery revenue stream today. Now, does that mean that technology won't solve that problem? I don't know. If you ask Jeff Booth, you just got to apply technology and time, and deflation will sort of take the reins. But I think right now, you're looking at an environment where the useful life of plants are being artificially haircut because you're not running these power plants optimally. Power plants want to run. They don't want to be turned down and turned up. It's much, much more efficient to turn up and turn down the consumption. The issue is that there hasn't been a reliable consumer who's able to achieve those performance metrics really until Bitcoin mining, at scale. And so if you want to spin up or spin down hundreds of megawatts, you can't do that by asking Walmart to turn off half their lights. You can really only do that by asking your ASICs to quiet down. And so you've never had a scaled, flexible consumer in the nature that Bitcoin mining has delivered that to the market. So I think, the capital efficiency, the flexible consumption, and the switching costs required for power plants to opt into a mining load customer is that sort of perfect soup to be able to achieve sort of next gen consumption. Now, does that mean that sort of the political coefficient of friction will be sufficiently low? To be determined, depends on the jurisdiction. If you ask, Eric over at Gridless, super low, super achievable. If you ask, folks in New York City, whether that's achievable, probably not. And so this is the beautiful, I imagine the Bitcoin mining landscape as like a huge sort of egg container where these pockets of super low depth are where all of the hash rate accumulates. And so imagine pouring water across a huge egg carton. You're going to find that water is going to get to the bottom of those areas. And that's the combination of political will, infrastructure availability, and cost of power. And capital formation is sort of the fourth leg of that stool, which I think we're going to get into. But that's the happy combination where Bitcoin mining is designed to thrive. And the good news is there's a lot of paths that get you there. It's not just one. It's not just, I need to go build a gigawatt in Texas. There's a ton of ways to get to a really high performance, financial asset being a Bitcoin mine. It doesn't happen only in the US, doesn't happen only on grid. It happens off grid, behind the meter, happens on methane, happens on solar, happens on nuclear. And that's what's so exciting, is that there's a lot of ways to solve the problem. I forget who said this. It might have been Naval Ravikant like 8 years ago, who said that, the more that you can opt out of finite games and opt into infinite games, the better your life will be. And I view Bitcoin mining as sort of one of these perfect infinite games that you get to play, where the board is always moving, the path to winning is always evolving, and what wins you the battle today doesn't win you the war tomorrow. So it's this constant game of evolution and improvement. And that's what makes it an exciting sector to spend your time on.
It's kind of always seeking out more value, right? Where can I create more value, more value, more value? If I sort of look back 4 years ago, 7 cents on grid in the US was cheap, right? Now it's like, let's maybe add some heat reuse or some demand response to that, or let's get the power price extremely low by being the demand of first and last response, right? So it's ever evolving. And I'd like to have your take on the whole AI piece. Because my theory has been so far, and I like to test that the AI development will only push that out more, right? These large infrastructures where a lot of power can be consumed, there's a lot more money to be made per kilowatt hour with AI installations over Bitcoin mining. And so I'd like to understand your take on whether that's going to accelerate that push to the fringe.
There's a few things baked into that question. The first is, I think that there are sort of two poles in the magnetic field of Bitcoin mining that I think about all the time. On the one side, there's gross margin, and you're exactly right. AI has better gross margins than Bitcoin mining, but on the other end of that magnetic field is multiple on invested capital, or return on capital, ROI. There's a lot of acronyms to try to measure that. And that's the other end. And that's where Bitcoin mining is still winning, because if you go to deploy a megawatt of AI, you're looking at, I don't know, $25, $35 million. 1 megawatt of Bitcoin mining is, depends on the machines you buy, but somewhere between $500,000 and $2 million bucks. Those are wildly different equations when you think about it as a capital allocator and a business operator. Not every megawatt hour is priced the same way from a revenue perspective. And that's really sort of how I think about the business is, I'm purchasing X megawatt hours. How am I monetizing those same megawatt hours? And what is my capital structure that's required to monetize those megawatt hours? So I think AI is super interesting. The load profile that it represents is pretty different than mining. And when you think about AI, there's sort of there's the training component, and then there's the inference component. I think the inference is much more power inelastic. I think the training is much more power elastic. So if I want to train a new model, I might be able to do that during off-peak hours or during low power price environments. But on an inference basis, I'm not able to do that at all. I have to be responsive as a data center to all of the people that are querying against the model. So there's a lot under the hood on the AI side that's not straightforward, both from a capital structure perspective and from a time of use perspective on how that infrastructure gets leveraged. But then on the Bitcoin mining side, I think, I still think there are some really compelling dynamics that are going to make even Bitcoin mining at on-grid large scale still sort of the best deployment structure for energy consumption, at least in the near to medium term. Now, all of this changes, and time drives prices down typically in technology, and so I think there's a bit of a three-body problem happening, but it's certainly exciting to see somebody else come to the party, which is, the key insight we had in 2018 is that low cost, high reliability electricity is going to be a leverageable asset for a really long period of time.
Yeah, and also access to infrastructure.
That hasn't changed.
Right? Access to large interconnections.
Exactly.
Yeah.
Exactly. Those are the beachhead, right? If you think about any sort of business strategy, you want to think about a land and expand. So if you think about what's the beachhead you want to first land on, it's that high quality infrastructure and low cost access to power. What you then build and do is a dynamic process that the MBAs can tell me what the right way to do that is.
I mean, it's an
but
infinite game.
In
as
the
you
meantime,
say. That infinite game never stops being.
It's an infinite game.
Yeah.
No. So I think it's interesting. I think we're at a really cool and dynamic moment in the market where there's both technological and economic innovation happening. If you told me 2 or 3 years ago that, the hydro assets all across Africa were going to be getting monetized the way that, the way the gridless guys have done it, I would have said we're probably 5 to 10 years too early, but they said, no, you're not. We're going to get started right now. So there's stuff happening there. There's stuff happening on the flare capture and on the methane side, on the landfill gas side. All of that stuff is super, super cool to see. It's stuff I'm excited to be a part of as time goes on. But in the meantime, it's just great to be part of a sector that's growing.
How much space do you think these large mega farms will have in like 10 years versus these sort of fringe applications where you provide additional value through heat reuse and stuff like that?
I think that the dynamic that we're going to see is really going to be driven off of energy policy globally. If we see the development of large baseload generation, I think the mega farm is here to stay. If we see a really slow trend in growth of baseload generation, I think the fringe applications are going to be more dynamic, at least in the medium term. But at the end of the day, we need to generate more electricity if we want to raise quality of life globally. And so as long as we see more electrons getting generated, Bitcoin mining has a role to play.
I agree. What made you start Griid, Harry? Where did you start?
Yeah, so I met our founder, like most great startup stories, 2 dudes on the internet. We met in a Telegram chat room, funnily enough. He'd been in the cybersecurity space, had a successful exit, had been into Bitcoin for a long time. I'd been into Bitcoin for a long time. I kind of came out of the, financial technology world for, all of 2.5 years after university. And we met, and we both loved Bitcoin. We both loved mining. We loved the idea of being able to build bricks and sticks rather than software, although we do build software as well. And being able to be part of a business that wasn't, raise venture money, burn it, and see what you have at the end. There's a monthly P&L. And so sort of we wanted to be part of a business that brought the traditional laws of physics, back to the business model, which is you got to generate net income over time. And that's the way to build towards success. So we were very, very aligned around those ideas. We both loved Bitcoin. We both were kind of thinking about what's the right Bitcoin business to get involved in. And, mining felt really compelling. It wasn't sexy at the time, which I like. It's changed quite a bit since then. But we really just wanted to kind of prove one step at a time. We said, we're going to crawl, then we're going to walk, then we're going to run, like any good 2-year-old. And then, we just kind of put shovel in the dirt and started building sites.
Where did you build them? Where are you today?
So we've got 3 mining facilities in the Tennessee Valley. We get served power from the TVA. They're, the largest federal producer of power in the US. And then they've got a distribution network of 156 utilities that, so their job is generation and transmission. And then they hand the ball off to all of their sort of last mile delivery partners, of which we've had a really great working relationship with, since 2019 when we energized our first site. And then we also have a behind the meter co-located hydro facility in upstate New York.
How does that work? What is the arrangement there? You always hear, we're behind the meter with wind farms. How does that work in the US? Can you just make bilateral contracts and go here, pull the rest from the grid? Or like what's the setup there?
So it depends on where you are.
Okay.
The grid, one eye is not one thing, especially in the US. So think of it as like a big patchwork tapestry of jurisdictions that are connected, but don't all have the same rules. In upstate New York, we just do exactly like you said, bilaterally with the hydro facility, and we don't run interconnected there. So we just take the power that comes off the dam. In Tennessee, it's like almost exactly the opposite. It's a huge federal network of power. I think TVA generates like 33,000 megawatts of nameplate generation, of which we're, a large but still small part of.
Okay.
And so there it's really just sort of on grid, very, very systematic, constant availability, high uptime.
You mentioned gridless, right? They do hydro. They have medium to small size hydro dams where maybe 40% of whatever is used. The rest is stranded, because there is no demand, and it's all private off grid. I assume that the hydro dam in upstate New York has a connection to the grid. What causes the energy to be
Yep.
cheap there?
Yeah. So, upstate New York, relatively lower population density there, and a lot of generation is up there. So the New York ISO, which is sort of think of ERCOT in Texas. New York ISO is the sister
Okay.
entity in that region. They've got a lot of generation, and they've got a lot of sort of seasonal advantages. It's cold. It's a constructive climate. So there's often periods of really constructive power prices in that area.
Okay, interesting. Is that somewhere where you deploy your most efficient run all the time ASICs, or where you maybe put your less efficient?
The other end of the spectrum.
Okay.
It's where we're able to deliver kind of the lower cost, higher variability type of profile. So we look to manage the fleet relative to the power availability, and so it's a place where lower efficiency and higher intermittent kind of usage is constructive.
What do you project these miners to do now when they ordered all of their S21s, M60s, replace them?
I think
what's going to happen
hash rate's going to go up.
Yeah, that hash rate always up. But these older ASICs have to go somewhere. Are they just being stored and then sort of they're hoping to be sold to the market when Bitcoin price goes up? Or what do you think is going to happen?
I think there's some of that. Yeah, there's definitely some of that. I think that, we're going to see two components. One is that there are going to be people who have the patience to wait for a higher kind of hash price market to be able to leverage those assets. And then there's other dynamics where there are these sort of medium to lower efficiency machines that are migrating jurisdictions, whether that's, South America or otherwise. I think that we're going to see, go back to the egg crate, we're going to see migration to those lowest points of lower efficiency units, and they're going to get used for some period of time. I bet you in South America, there's still S9s running.
I know for a fact they are.
And we're going to see that. Yeah. So I don't expect that to change. I think, some of it's going to be a function of machine cost, and some of it's going to be a function of hash price. But over time, we're going to see the useful life of ASICs, likely extend, which is going to keep hash rate higher for longer. I forget, I think the Coinmetrics guys did some of the nonce analysis on the machine types that they fingerprinted. So, I look at that chart closely to just see what's still running, and what, if I make some reasonable assumptions around the power cost structures that are sitting on top of those machines, there probably still is a lot of juice left in the tank.
Yeah, but there's also a lot of S19s sitting at 7 cents in the US. The question is, what's going to happen with those? Where are they going to go? They're going
to change hands.
Change hands to where, though?
They could change hands to the Middle East. They could change hands to Eastern Europe. They could change hands to South America. Yeah. I think there's still, we're still scratching the surface. I think about it from the infrastructure side, so if you're building a new site, being able to flex across a number of different machine types seems like a really valuable way to build, because this market is, the ASIC market and the Bitcoin market are kind of pro-cyclical, counter-cyclical. And so, when Bitcoin goes up, a lot of these older machines become very viable. When Bitcoin goes down, those machines change hands. Um,
Yeah.
and I think, we're still in just the very, very early stages of the build out here.
The-
Or if you've got a, wellhead on your property somewhere and you can plug in 50 or 75 ASICs, I think there's a ton of infrastructure waiting for that kind of deployment as well.
yeah, that's capex intensive though. Then again, right? I mean, would you go ahead and
Hmm.
deploy millions to plug in your old M30s? How risky is that? Or you?
If I thought I had line of sight on an upgrade cycle.
Yeah. Okay, fair enough. I'm hoping that a lot of those machines, Harry, will end up on the African continent to sort of unlock it and take down the perceived risk that a lot of mining companies have, because there's a bunch of stranded decentralized power generation to be done there. I mean, I'm talking literally thousands of hydro dams. Um, and the good thing when Bitcoin price go up is that a lot of these miners will have capital to use and machines already to maybe build out these dams, right, and become the demand of first and last response, where traditional financial industry will never finance them, because they will point towards the door once you mention that you're using 50% of your project is going to be Bitcoin mining, because they don't understand it. So we need that intersection between capital, energy money, and Bitcoin miners, and both worlds sort of need to come together. So from what you're saying, Harry, I am guessing you are not operating at all outside of the US. Have you just found better
Nope.
opportunities inside of the US, or why is that? Never.
Um, we looked for a long time at the beginning, ex-US, and we just couldn't get our head wrapped around kind of jurisdictional risk or counterparty risk. It didn't make sense for us at the time. I think that landscape is changing. I'm always happy to evaluate opportunities outside the US. I think that, it's naive to think that Bitcoin mining is only going to develop here. I think there's a tremendous amount that can develop here, but it's by no means limited. Um, and some of it is just time and attention. There's only so many projects you can accomplish in a year or in a decade. And we don't think that we've run out of opportunity here yet. But, I think of our power pipeline and the future growth really as like an opportunity to leapfrog, right? If we see a new project that beats out the old competing ones, let's put something else to the front of the line. That sounds great. Um, so we're always looking, we're always prepared to evaluate stuff. But we think there's a ton of meat on the bone in the US as well.
How do you guys evaluate risk with sort of recent news around registering how much power you guys are using and stuff like that? Do you still think like the US is top tier when it comes to international mining locations from a risk perspective, or what are your thoughts on that?
Um, I think risk is a dynamic process, right? So, nothing stands still. We're always constantly kind of reevaluating. The good news is that the truth is on our side. Mining does create a more stable energy environment. You can't get out of frequency on a grid by more than a couple of tenths, of a hertz. And so because of that, the need, the engineering need and boots on the ground reality, um, is such that mining is a hugely valuable service to these electric systems where we operate. And so, my hope is that over time, the folks that are in charge of power systems in the US will be able to articulate that to regulators and legislators and make clear the value that we provide as an industry. And so I think that, I still think the US is enormously constructive from a capital formation and from a regulatory perspective. It doesn't mean there aren't flies in the ointment or headwinds. Um, but there's still a ton of good working in our favor. I'll read you a quick quote from the CEO of the TVA, who I'm in an article with, which is great. And he's enormously constructive kind of in his assessment of it. But he says, quote, and this is the gentleman Jeff Lyash, quote, "It's a very flexible load They can curtail their load quickly on peaks, and they did during this winter storm when we needed that, Layesh said on a January 30th conference call. So they're quite good to work with. You know, that's the largest federal grid in the US, and their CEO is talking about the role that we play. So while we'll see stuff out of Washington that might look like a regulatory headwind, the people with boots on the ground who are operating these systems, they get
They
it.
say no, our grids don't work anymore. That's almost like a Trojan horse, right? Kind of like Bitcoin currency. Bitcoin, the asset comes in as a Trojan horse for solid or hard money. Bitcoin miners come in, provide
Mm-hmm.
value that you now no longer need to paper over with freshly printed currency, and you can't remove it at a certain point because it provides value that you otherwise cannot get anywhere else. All right, very interesting. Yeah, I mean, we'll link that article. If you send me the link, we'll put it in the show notes. I assume it's released.
I sure will.
Yeah. You mentioned capital. You guys just went public, right? What goes into that? Why now? Why not stay private? What made you do that?
Yeah, I mean, the good news is that we made the decision to go public over 2 years ago, and the reasoning for that remains unchanged. We weren't trying to time the market or anything like that. We just believed that, the large scale industrial Bitcoin miners in many cases belong in the public markets. I think there's a decentralization argument to be made, which is that we're able to diffuse ownership and make ownership in our company incredibly broadly available. And so, you could decentralize Hashrate by putting it in the hands of many, many people, or you could decentralize Hashrate by putting ownership of the company's operating Hashrate in the hands of many, many people. So I think there's a compelling case there. And then the other is just capital formation. It's not a secret that the Bitcoin mining industry is highly CapEx intensive. And when we looked at our opportunities to form capital in a cost effective way, the public market operators have the greatest availability of that. And our perspective on that really hasn't changed since we made the decision to go through the transaction.
When you say decentralization by bringing mining stock into people's hands, does that mean those stockholders also have decision-making capabilities or can
They have voting rights.
cast their votes?
Yeah, shareholders in companies have voting rights on, whether it's on, management stuff or board stuff. There's a wide range of decisions that get put to shareholders as part of, the operating agreements that we work under.
Yeah.
And I think, there's a level of transparency that comes from being a publicly listed company that's positive, whether it's from an earnings disclosure, an audit disclosure, or material contracts that get filed in the public eye. All of that brings a level of visibility to how we do business that we think, puts the mining folks in a good light.
People will probably roll their eyes at this point because I've asked this question probably 3 times to Hive, Marathon, Bit Digital. The short term stock price value versus the sort of long term ethos around Bitcoin in general. How does that bite itself, if at all, if you're a public company? If you're driven sort of by short term goals in stock price versus thinking long term and making the right decisions there. And then also, if you say people can make can cast their votes, how much are you giving away there of your own decision making capabilities from when you were solely private?
Yeah, look, there's no right answer on how you should run your company. I can only share the thinking that, kind of went into why we made these choices. The piece that I think a lot about is that, we're founder led, right? Our founder and CEO is the same person who started the business in 2018. I was the first employee, and we're the people running the business. And so, there's a founder culture and ethos that we're able to bring to Grid that we care an enormous amount about. It's reflected in the culture of how we run our sites and how we hire people and how we grow people um, within the organization. And so, there's something that, there's no hired gun, right? We didn't bring in somebody to run a real public business. It's us. And so there's something that happens for us culturally around being Bitcoiners running a public company that lets us continue to take the long view, to take the long-term perspective around, why are we doing this in the first place? It's because we think we can generate positive cash flows out of Bitcoin. And we think we can do that over a very long period of time. And that matters quite a great deal to me. And it's reflected in the way that we make all of our choices. And so there's, of course, going to be pressure from the public markets and shareholders that we're accountable to. But it's also on us to provide a perspective on the vision that we have around, the business, the sector, and the broader sort of Bitcoin ecosystem. That's what drives us and gets us up in the morning. It's working hard on behalf of all those people. And that's what really drives the core decision making is what's the best long, not what's the best quarterly decision.
So why would people decide to buy Griid over any other mining stock, do you think, that's available?
I mean, look, the
Speak
sector
as
is
freely
filled.
as you want.
Well, I'm limited somewhat by by SEC guidelines. I can't take a position particularly on Griid's price or us versus our peers
gotcha.
or anything like that. But the good news is that there's a lot of great companies in our sector. I think I'm close with many of the other executives at the other companies. I'm sure all your listeners have heard of and spent time listening to them on your podcast. I'm proud to consider many of them friends. And, the way that we've thought about this business for a long time is really putting one foot in front of the other and delivering value with everything we do. That starts with being as vertically integrated as we're able to be, which means we're not spinning our own electrons today, but everything in between the electron and the ASIC is stuff that we care about being in control of. We're control freaks. And so that means looking at every line item on the project budget and squeezing out all of the costs that we think are artificial or are there, extraneously. And so being able to do incredibly high quality construction and development, controlling that process and doing it ourselves, that's all stuff that we care enormously about. And, we don't like middlemen and we don't like outsourcing because we want to know exactly what's happening at every step of the process. We built our own demand response software stack to be able to manage our load. We have a lot of sort of topology and insight into what's happening in every site at every miner. We love that kind of stuff. And so, attention to detail, we just really, really, really care about how we run. So there's an operational excellence piece. I can't speak to what our peers are doing, but I know that I wake up every day thinking about that. The other piece is that we build incredibly long-term power relationships. So our site at upstate New York is with, one of the largest private portfolios of hydro dams. They've got 85, 86 dams in their portfolio. When the time is right, we'll think about growing with that partner. We love working with the TVA. We've got 3 facilities here, as well as a manufacturing facility here where we build and wire all of our own containers and all the infrastructure that goes inside of the box. So it's just that ongoing commitment to operational excellence. It's that ongoing commitment, to vertical integration. It's the ongoing commitment to building the right types of power relationships over the long term. And at the end of the day, we just want to mine more Bitcoin. So it's really just taking sort of those very blue collar, very fundamental bottom up views on how we run our business and extending that at scale.
Interesting. Yeah, sounds like you're taking the long-term approach there, by having a lot of control over supply chains as well. Are you gonna?
I could have done an ICO, man.
Yeah, no, please don't. I think those times are behind us. Please do not do that. The Griid token.
Nope.
By the way, there's no relationship between Brains II and Griid II, is there?
We were II first.
Okay.
but we love the Brains folks. They're a great team.
We'll leave it at that. Okay.
You should have Christian on.
Guess who was here before you?
No way.
Yeah. No, of
Oh,
course.
Christian's awesome.
Yeah. It's not out yet. Now people will listen to this, or we're recording way before it'll be out. But anyway, have you guys thought about doing your own pool? I know that's a common trend right now.
We haven't thought about it recently. We love the folks at Foundry. We love the folks at at Luxor and many others. I think they're building their own interesting businesses. When I think about what we're great at, hiring a big team of software engineers to run a pool and trying to build a sales team to get Hashrate on the pool, it's not our core competency. We love being focused. And so, I think that's worked for others. I think it's interesting. But, for us, we're here to provide proof of work. We're not here to manage, the everything after.
What would you say is sort of the most expensive part from Electron to SAT to outsource? Is it the firmware? Is it the pool? Is it the
I think it's site
infrastructure
management.
building?
I think it's site management, and I think it's probably power. I'm trying to say hosting, but I don't quite know what the right way to frame that is.
I mean, you don't.
If you're paying,
right?
No, we run our own. We run our own metal. I think as soon as you're paying pennies above the actual power price, or you're paying for somebody else to run your facilities, you're starting to give up pieces of margin that are pretty scary to me. And at the end of the day, I'd rather do the harder, slower thing and really be in control of how that business is going to perform.
No, I agree. As I said, I think I can't remember whether it was before we started recording or not, but 7 cents 4 years ago seemed very cheap.
Not anymore.
And today, paying 7 cents in somebody else's margin, and you see that as well, like the sort of asset light competitors of yours, they making moves into the direction of fringe projects, demand response, heat reuse, or running their own operations, buying sites. Exactly.
We're the capital allocation sort of tells the truth. And so as soon as I saw, Fred is a great CEO and the Marathon team is really strong, but they just put $150 million into site acquisition. And I think they did that to achieve some of the cost controls that, we've never been able to kind of justify living without.
Yeah. What is the 1031's role in your move to go public? What is the...
Yeah. 1031's one of our investors. They've been an incredible partner. They're very, very sharp, very thoughtful. We spend a ton of time on the phone with them, thinking about the space, thinking about Bitcoin, thinking about, what are the other portfolio companies they have that would be interesting to maybe work with in the future. But really they're an investor in us and just a great strategic partner, thinker.
Okay. Somebody to bounce ideas off of.
Yeah. Like any good investor, they're very solutions oriented. They're not, they're when you think of like what does it mean to be value add? What are you bringing to the table other than capital? Really it's a thoughtful sounding board that we know is heavily aligned with us. And that's been invaluable.
I mean, they've got a broad range of investments. I think, their energy and mining investments from the last thing I listened to one of their podcasts a while back was relatively slim, the share of energy and Bitcoin mining investments compared to the other stuff. So how important do you think it is to have that more broader angle, that more generalist Bitcoin angle on a mining operations? Is that critical? Where has it maybe provided an idea that you wouldn't have had by yourself?
Yeah, I think, when we think about what we're fundamentally aligned with, we're fundamentally aligned with Bitcoin. And as miners, we're fundamentally aligned with Bitcoin being more widely adopted and used. And so that emerges both from the price of Bitcoin, but it also emerges from, the use of block space and the transaction fees associated with it. So having the visibility into the broader Bitcoin development ecosystem gives us a more informed opinion on just what's happening in the commodity asset that we're tasked with securing and therefore generating our revenues in. And so, I always think that, I can do more with more information than I could have possibly imagined before I had that additional information. And so having visibility into all the different things that are happening across the broad Bitcoin ecosystem, whether that's a layer two or, some alternative, opportunity to leverage, I love what the guys at Anchor Watch are doing, with insurance. I think that's going to be a big driver for more people feeling more comfortable owning Bitcoin and ensuring that ownership. Or, stuff that's happening, I love the team at Primal, on Nostr. They've integrated a huge amount of Bitcoin payment rail into a social environment. And so that gets me excited about securing more Bitcoin transactions. I think the number of Lightning channel openings and closings is going to go up enormously because the utility of these networks is going to go up tremendously. And so therefore, we're able to have a more informed view on what transaction fees could look like because we see the type of throughput that's happening across other areas of the network. And we can have, that more sophisticated opportunity to bake those thoughts into how we think about the future. So, the good news is the state of our network is very strong, and the state of innovation and development across other areas of Bitcoin that you would never think would touch mining, but eventually do. I love knowing more things because I don't know what I get to do with that information in 6, 9, 12 months down the road. But I think all of that kind of very, very, broad horizontal view of the Bitcoin ecosystem is valuable as a miner who's got, a critical but relatively smaller role to play.
It always clicks down the line somewhere. It's like networking at events. People say, "Oh, why should I go to Bitcoin events?" Well, like, because you learn things, and especially if you sort of earn your money in this space, things click into place down the line somewhere 12 months, and the connections that you make at some event, I don't know, 6 months ago, they pay off in 24 months somehow, and you don't even know yet how, right?
Exactly.
What
I'll tell you what my dad
really
says. I'll tell you what my dad says briefly. It's not about being in the right place at the right time. It's about being in the right place all the time.
Yeah. No, and that matters not just physically, but also in the right headspace. The amount of opportunities that you might lose because, I don't know, you might not feel like getting up or whatever. That's kind of a driver, right? And if you're driven by and have to, I don't know, have mouths to feed, and sort of, there's nobody else paying you but yourself, then yeah, I don't know. That's maybe for another day. But what we said just now was really interesting in that the wider ecosystem actually really, really matters because Bitcoin mining at the end of the day is the foundation for all of it, along with nodes and the security aspect. So understanding what the Lightning rails are doing, especially, I had to chuckle just now because of layer 2. It's kind of becoming a meme at this point.
Yeah.
Weston Tron is also working on a layer 2, I think. It's like, what's happening? Is this the new ICOs, layer 2s? But just on a serious note, to understand what happens in the wider ecosystem, why is my hash price going up? What's the story around ordinals being involved in all of it? Because at the end of the day, it determines a lot of your revenue.
Exactly. I mean, imagine being an internet company, right? Or being an ISP or a fiber company and not knowing what was happening with the network effects at Google or Facebook, right? It would be unimaginable, Yeah. And so to me, I view it exactly the same way. We're laying the fiber and we're running the ISPs and the early data centers, and everything else that's happening on Bitcoin are these huge new companies that are going to drive a tremendous amount of growth and attention to the underlying asset that we're tasked with securing. And so, to me, you almost can't run this business without having a view and having some insight into everything else that's going on.
Yeah, very interesting. As we sort of close out here, Harry, I had 2 more questions that I derived from the MinerMag article. In there, I think it says your market cap is 500 million right now. What is
It's
that?
probably lower than that, but I haven't done the math.
What does that consist of? If you read somewhere a miners market cap is 500 million, what sort of percentage wise is that for you guys? Is it treasury? Is it machines? Is it like transformers? What is it?
Oh, I would say so. There's two concepts, right? Like the way to think about it is it's just the total number of shares outstanding times the price.
Okay.
The way that we think about it is it's our job to continue to deploy infrastructure, and it's our job to continue to generate Bitcoin in a really cost effective way. And so the market will come to an understanding of how to value that over time. I think we've
Yeah.
only been in the public markets since, well, January 2nd, we listed in Canada. And then at the end of January, we listed on NASDAQ in the US. So we're still just an infant kind of in our public market cycle.
Why do companies do that? Why first the one and then the big one? Is it like a stepping stone, a pre-qualification? Is it
Yeah, I mean it's just these things take time to get them through, and it's just kind of a managing of the path of least resistance and wanting to complete the transaction and get back to work.
yeah. All right. Interesting. The miners that you have, this is the last question here. The miners that you guys have in upstate New York you said at the beginning, right? That's sort of where you put your machines that are less efficient and stuff like that. What do you have running there?
I can't share.
Can you share?
I
You
can't share.
can't share?
How I would answer that is that one of the things we think really thoughtfully about is how to develop and deploy a holistic portfolio view of the fleet. And so mapping the right miners to the right site with the right profile over time, that's a dynamic process. And I think it's an
Okay.
area that our industry has not communicated that clearly about yet, which is that there's a range of options whenever you think about these types of machine types that you want to roll out. And so taking a really holistic portfolio view of what you purchase and where you put it and what's the profile at each of those locations, and creating that broad portfolio um, construction approach. Because miners are really capital allocators, right? We're deploying capital into the site development, we're deploying capital into the miners themselves, and marrying those assets together in a way that is best supported by the infrastructure and the electricity that you have at each location. That's a dynamic process. And so
Mhm.
continuing to innovate on the portfolio construction is something that we spent a lot of time thinking about over the life of the company.
So, I mean, if you look at I guess, yeah, I don't know if there's a way to derive it for anybody listening, right? If you read the articles and you look at the hash rate you guys have, and look at the money that's sort of in the company, because now it's public knowledge, right? You can sort of derive from that what the average efficiency is and all of that.
And
Okay, I
we're
mean,
gonna look to continue to open the doors and disclose in as much of a level of detail as we're able to. So these are
mhm.
these are evolutions for us. Now that we've kind of got our public company legs under us, that we'll want to share more as time goes on.
Any stance on if you had to buy miners today, newest gen, what are you a
Um,
buy of?
I would spend all
I'll
of my
tell you. Look,
time.
I'll tell you why I'm asking this is
Yeah,
because from where I am, MicroBT is making leaps and bounds to catch up. Their support seems to be better. The machines run better. They're more expensive. They're less operational expensive, or less expenses on the operational side. So the actual efficiency between Bitmain and MicroBT in the field might be much closer than what the numbers say on paper.
yep.
So yeah, I mean, I think, was it Riot that just said, hey, we're doing MicroBT only? Like, that's
hmm
huge as well. What are you a buy of? What is your perspective, if you can say? Tell me
What
as
I
much as you can.
Yeah, what I would say is that I want to be very nimble in this market, because I think that the dynamic opportunities are are really, really interesting. And I think that
What does that mean? The dynamic opportunities.
so rather than saying, hey, I'm going to go place a 50,000 machine pre-order and wait for them, being able to say,
Ah,
hey, where can I go? What are the overlooked opportunities? Who's trying to roll off of something? All of that kind of stuff. I never want to close the door to that just because I've, put all of our sort of capital planning towards these monolithic pre-orders. I want to stay nimble and dynamic, and I want to be able to seize opportunity in real time. Um, and to me, there's a place for the super high efficiency. There's a place for the big pre-order, but there's also a place for everything in between where, somebody else's challenging situation might be our opportunity.
okay. Used machines, is that ever an option?
I love it all. There is no bad Terahash.
There's no bad hash. I like that. Harry, is there anything that I did not ask you that you wish I had?
Um, no, I think we covered a lot of ground. Your questions are super thoughtful. I apologize for the places where I'm not able to answer as fully as I'd like to.
Nah, not at all, man.
Um, but no, I just, what I'd leave people with is this is a rapidly evolving, highly dynamic industry. It's not for the faint of heart. It's a hard business. It's a lot of work. You're looking at our first site technician, where I lived on one of our sites in a trailer, for 2 weeks on, 2 weeks off while we were getting off the ground. And so I've shorted and fixed S9s and pulled hashboards apart. And, I don't do quite as much of that now as I would like to. But, if you're not interested in the sort of dirt under your fingernails part, you should think about if this is for you, because it really is, sort of a throwback to the late 1800s or early 1900s of a business. And that's what I find to be tremendously motivating and exciting. And I have such a respect for construction workers and electricians and all these other areas that, I didn't grow up being close to, but now I'm incredibly grateful to have spent a lot of time with. Um, so the folks on our team, I couldn't live without them, and they're, incredibly industrious, hardworking, creative, innovative people. Um, and thank goodness for Bitcoin for leading me to them.
100%. I mean, now everybody's studying and plumbers are becoming really expensive. I assume electricians are similarly increasing in price on the market.
They deserve it. They're
Um,
they're they're generating enormous value, and that's getting reflected.
100%. Does Bitcoin consume enough energy, Harry? Yes
No,
or no?
no.
Why
Our
not?
our electric systems are still too fragile, and the way to consume more electricity is to generate more electricity, and we need to generate enormously more electricity if we want to go where I think we're headed. And Bitcoin's going to be part of that story, and Bitcoin doesn't consume nearly enough electricity yet because we're not stabilizing every grid in America or in the
So you're
world.
saying, so you're saying hash rate up.
Hash rate up.
Hash rate up. All right, man. Guys, thank you very much for listening. I hope you learned something new. Harry has probably done this a couple times before. If you haven't, check out his episode on or episodes, I should say, on Peter's podcast, What Bitcoin Did. A bunch of knowledge there as well, not just mining, but general stuff. Support the show with some hashes if you want. There's a description on how to do that in the description. I will see you next time on Sunday when we talk mining again. I don't know who's going to be the guest yet or what episode will be released, but we'll find out together. Yeah, guys, thank you very much for listening and have a good day. Thank you. Bye-bye.